ever thought to yourself, are my accounts fully covered by the FDIC? Or how about, is my financial institution FDIC insured? Then this is the tutorial for you. Hello, and welcome to an overview on how to confirm that your deposited funds at your financial institution are covered by the FDIC. This tutorial will help you navigate the FDIC's website and locate the online Electronic Deposit Insurance Estimator, or EDI. We'll run through a couple of scenarios to help you become familiar with using the online estimator. And finally, I will identify some great resources for you on the FDIC website. First, what is the FDIC? The FDIC, or Federal Deposit Insurance Corporation, is an independent agency of the United States government that protects you against the loss of your insured deposits if an FDIC-insured bank or savings association fails. FDIC insurance is backed by the full faith and credit of the United States government. FDIC deposit insurance covers the depositors of a failed FDIC-insured depository institution dollar for dollar, principal plus any interest accrued or due to the depositor through the date of default, up to at least $250,000. Now, you might be asking yourself, what type of accounts are covered? Well, that's a great question. According to the FDIC website, the type of accounts that are covered are checking accounts, negotiable order of withdrawal, or NOW accounts, savings accounts, money market deposit accounts, time deposits such as certificates of deposit, and finally, cashier's checks and money orders and other official items issued by a bank. All right, now that we have that covered, I'd like to define some common account ownership types and coverage limits before we journey over to the Electronic Deposit Insurance Estimator, or EDI. According to the FDIC website, single accounts are owned by one person and are covered up to $250,000 per owner. Joint accounts are owned by two or more persons and are covered up to $250,000 per co-owner. FDIC coverage limits. The standard insurance amount is $250,000 per depositor per insured bank for each account ownership category. The FDIC provides separate coverage for deposits held in different account ownership categories. Depositors may qualify for coverage over $250,000 if they have funds in different ownership categories and all FDIC requirements are met. All deposits that an account holder has in the same ownership category at the same bank are added together and insured up to the standard insurance amount. To help with this, let's proceed to the EDI. The Electronic Deposit Insurance Estimator is an online tool provided by the FDIC that helps depositors determine how the insurance rules and limits apply to a specific group of deposit accounts, what's insured, and what portion exceeds coverage limits at that financial institution. To locate the EDI, let's go to www.fdic.gov. From here, hover over Deposit Insurance, and you will see a few options. Let's hover over the EDI Online Calculator, and here you will find the calculator. Let's click on EDI the Estimator. Now, you can be vague or as detailed as you'd like when completing the EDI. Step 1. Either type in your bank's name or search for it by clicking Bank Lookup. Select your state, city, and bank name, and then click Use this bank. For this demonstration, we will be using the Personal Account option. Important note: if you are unsure of what something is, simply use the helper links, like this one. Now, select the correct ownership type. For our example today, let's choose Joint with no beneficiaries. Again, if you need assistance with terminology, just use the helper links. Okay, let's work our way down the page, filling in the appropriate fields. If there are more owners, click the Add Additional Owner button. For this example, we only have 2 account owners. Complete the account nickname and account balance fields. And finally, select the appropriate deposit type from the drop-down box and click Add to Report. If you have more accounts at that financial institution, click Add New Account, and simply repeat the process. For this example, let's add 1 more account. Be sure to use the correct ownership type when completing the fields for each account entered. Once all of the account information is entered, you have the option to make any edits before calculating coverage. Now, click Calculate Coverage. For this example, the ED states that I am fully insured by the FDIC based on the information I have entered. Let's look at one more example where we are not fully covered. To begin a new report, click Create a New Report. I will quickly enter in the new scenario account information. Once I'm finished entering all of my account information, I'll click Calculate Coverage. For this example, ED estimates that some of my money in this financial institution exceeds FDIC limits and is currently uninsured. If you'd like to learn more about what you can do to protect your deposits, please visit www.fdic.gov/deposit or contact the FDIC at 1-877-275-3342. For additional resources, return to the home page and check out the Frequently Asked Questions link. And feel free to surf the FDIC website for additional education. There is a wealth of information on this site. Thank you for your time and attention. Take care.